I'm Troy Gandee. I'm a real estate broker and investor in the Charleston area. I own a real estate brokerage. We focus specifically on investment properties. Also flip stuff, wholesale some stuff, and I have some apartments. So with me today is my property manager. I'll let him introduce himself.
Hi guys, my name is Jaymes McCloud with J.H.W. Enterprises Property Management. We manage a lot of Troy's properties as well as some other investors' multifamily properties throughout the Charleston region. We specialize in just kind of overall stabilization, renovations on the interior, exterior, and just kind of working through the life cycle of that asset for the investor.
This one was actually listed, but it was on kind of a more public-facing MLS. It wasn't really a private MLS. It was a fairly new listing, and the agent was out of area. So I think she was just not very familiar with our market. The photos were pretty poor. There was very little information. She had some pretty bad documentation on there. So I just reached out to her directly from there. Fortunately, I was looking for something similar at that time. So had it been on one of our more traditional MLSs, I think it would have gone a lot quicker. When I transitioned away from single family into multifamily, Jaymes has been a huge resource for me, not just for my own, but even properties I broker. I'll send him the flyer, the listing, whatever I've got, and I'll say, what do you think about this? What do you think market rents are gonna be? What do you think vacancies are gonna be like? And Jaymes almost always gets back to me, at least within that business day, with a pretty robust answer.
I think one of the things that are critically important when you're understanding or purchasing an asset is what is the strategy? What are the goals? You can't just say, I wanna stabilize and have a positive NOI, net operating income, but what is the true strategy? So when that happens and we look at, okay, what is the existing rents? What are the existing leases? What's the end date of those leases, the start date of those leases? Are they conventional tenants where they're working class individuals, or are they Section 8 and agency tenants throughout the Tri-County that support these individuals that live in this area? What is the overall dynamic and overall picture of the property and the tenants there? From there, we can then extrapolate and put together a strategy plan. Are we going to renovate 3 units, or are we going to renovate the whole property? Are we going to issue renewal notices or non-renewal notices? What's the timeline of that? And by working with the property manager during the due diligence process, it helps to get that strategy together before closing, so that post-closing, you have an actual strategy plan to just execute it immediately.
And as Jaymes was just saying, if you've got a strategy to turn these properties over, if you're trying to stabilize it, it could be a really expensive few months. You're not really maximizing your rent income because you're having to cycle through and you're having to renovate. So that's got to be paid somehow. So the biggest issue is probably going to be your cash and having access to capital, but the underwriting is different too. You have to provide a lot more documentation. You have to be a really good borrower. You have to collect a lot more documentation from the previous property manager, or with the help of your current or new property manager. You've got leases that you got to get. You have to make projections. You're basically trying to sell it to the underwriter on the bank side. So you got to be a lot more organized, just a little bit more professional, I'd say.
And I'll just add to that briefly. I think it's important to locate and understand what he just said about the data coming from previous property management companies. One of the worst things you can do is onboard a property or go through the underwriting and financing portion, and you don't know how many tenants of that existing property are under eviction.
Yeah.
Because that can extend your plan by months if you don't properly do the due diligence and identify of that property, who do we have to file eviction on, or 1, who's currently under eviction, and 2, in this area, specifically in this market, whenever you have a Section 8 property or tenants that have vouchers, you can bank on 2 to 3 months during a transition period before you even get that payment.
Sure.
You'll get the full payment, but it'll be 2 to 3 months later because of the transition requirements. And I think those are critical details that get missed all too often, and it impacts the original plan that the investor has, which then, because they don't ask the right questions or partner with a property manager that actually has the capacity to manage the property and the life cycle, it can cause an abundance of issues.
One of the nice things is, for the most part, rent's guaranteed to some extent. It depends on the percentage of the voucher, but that does make things easier because you're going to have at least that amount of sort of a guaranteed drip of income.
I mean, the bulk of what he just said is money guaranteed. Just speaking on pandemic, 100% of the tenants that received subsidized housing was secured during the pandemic. So that in itself is just an overall great opportunity. I think the other big opportunity that a lot of people don't really pay attention to is the opportunity for rent increases to market rent. You got to think about it. Section 8 is not going to come to an investor or come to a tenant and say, hey, your lease expired 10 years ago. It's time for you to renew your lease, because they've been paying under market for the last 10 years, right? So when you identify the opportunity to raise the rents $200, $300, $400, and it coincides with or without some of the renovations that you're doing, it's a prime opportunity. And all you have to do is show comps, which you already have during the transition, show that the property itself is habitable, right? Which should be the duties of a property manager and what you would find during the purchase of the property. You can literally submit a notice to the tenant, to the agency, and it takes about 60 days, but you can raise rents $30, $300, $200 based on where that tenant's original rate is at.
Yeah, and I'll actually add to that too. Part of the vetting process of the deal, like you said earlier, or we were talking about earlier, is that's a big factor that I look for when I'm analyzing the deal, is rents that are under market value. Yeah, I can see a lot of value there, and that's a big part of the long-term projection for the performance of the property. This property, I think my purchase price was $850 on it, which we did a bridge loan because we knew it needed a lot of improvement. We needed to bring some of the rents up. And the goal fairly soon will be to refinance it into a longer term, either a fixed, like a 20, 30 year, hopefully fixed note, or some kind of interest only note for a shorter amount of time. It just depends what we get. But some of the bigger issues when I bought it initially were, like I said, the listing was pretty bad. So the information I was gifted was that all the units were renovated and they were all 2 bedrooms. So it's a bit of a surprise when we get here and only one of the 10 had actually been renovated, and only, I think, 7 or 8 are 2 bedrooms. The other 2 are 1 bed. So that affects your rent roll significantly. And I think the rent roll at that time was less than $4,000. It was in the 3s, very under rented and a lot of uncollected debt. So Jaymes took over from there through this whole stabilization process. So I'll let Jaymes tell you kind of what the game plan has been for that, and then what the numbers are now and what they will be when we're done.
So like you said, we were expecting all 2 bedrooms, fully renovated. Went through and it was like, oh, that's not it. We got 8 2 bedrooms, 2 1 bedrooms, not renovated. And the one that was partially renovated was like, 1980 versus 1950. So you get the point. But at the time, like you said, the rent roll was super low, 3,000, 4,000. Right now we're about trending about 7. And as we go through the just stabilization process, we'll be closer to like 11,000. And mostly of that is the fact that the 2 bedrooms were severely under market. We're talking 6, some 5. We even had a 300 unit that was rented at that amount, and 3 of those tenants are Section 8. So we, without having to do anything, we just submitted notice and said, hey, we want to increase those renewals immediately. And through that process, we've been able to just gradually get the rent roll increased, and it's been definitely rewarding. The one big factor that has helped, the operational expenses has decreased. We've seen where costs with the water bills were extremely high, that's went down. We were able to save money by getting a new dumpster company in place. So we were able to carve off about 10% of the expense ratio from when we first took over to now, which is also a benefit. So you got managing of the expenses and increasing the rent overall, just works for a great property.
And the capital improvements too, we added HVAC to all 10 of the units. There was no HVAC. So that also further justifies that rent increase.
Absolutely.
Yeah, and then we're in the process also of doing a laundry facility. We're just waiting for that equipment to come in, but those will be coin operated. So that it won't make a huge impact really on the income, but it will be a very attractive amenity for the tenant.
Which again adds to the overall goal of rent optimization that you're trying to achieve.
Yeah. It's pretty vital when you're looking, especially at assets like this, but really just in general in this investment world, you want to be very comfortable with your lender. Because these deals come really quickly. They need to be taken down really quickly. So what you really want is just a very competent lender that's transparent. And what I've said about these guys too, many times now, is I feel like they're on my team. I just feel like they want me to succeed. It's a huge difference. It changes your mentality when you feel like you have that support group behind you. and you can reach out to these people really quickly and say, hey, this is what I want to do. What do you think it's going to look like? And you can get some ideas really quickly. This one I think was a little bit interesting for all of us because we're doing a bridge on a pretty big property. So it was kind of uncharted for me. I haven't done one this big. And now Coastal's starting to get access to some longer term, bigger loan types with this type of asset. So I think it's going to be a really, really good process, just start to finish. We're going to see the whole life cycle of this thing. But it's vital. I mean, that's one of the biggest components of this is the finance. So you want to make sure that you've got somebody behind you that you can trust. Multifamily is really interesting. Jaymes and I talk about this frequently. We're both somewhat dependent on this asset type, him with management, me with brokering, and also buying it myself. But it's a very popular asset. The inventory with these is extremely low. So I guess the biggest tip I would try to give people is to try to be really expeditious when you're looking at these things. Have your team lined up. There's a lot of folks that I think they're being told that this is the asset they should focus on, and they might not have a lot of experience. Personally, I would tell those newer investors to look at smaller deals first before they work their way into this stuff. Again, because the financing is completely different, they're a lot more expensive. So try to be quick. Try to have your formulas in the back of your head so when you see it, you can come up with something pretty quick. And also be familiar with your market. That's a big one. You know, when I see something like this come up, I'm already pretty familiar with that specific neighborhood. So I'm able just on the back of a napkin to figure out if I think it's going to work or not. And then I have Jaymes double check behind me, and then I get my lender involved. So, you know, try to be diligent with the market, plug in. Don't be scared of it, but also don't be too brave before you're really ready to take on this kind of an asset. So find me at MavenRealtySC.com. That's my brokerage. We focus specifically on investment properties, but we broker about everything. And then I'm also one of the co-founders of the REIA here locally. That's REI Central. You can find that at rei-central.com. That's a meetup we do the first Thursday of every month, so feel free to come by anytime. And then Jaymes, where can they find you at?
Yeah, you guys can find me on www.jhwenterprise.com. Find us on Facebook and Instagram, jhwenterprise.com. And that's where we are. You know, we're in the community. We're part of the chamber. We're part of a lot of local organizations and making an effort, also doing property management, but just being a part of the community and see how we can be a benefit.